Did we get assigned yet? Hey everybody, this is Bookie's Revenge. We're back with another $500 5-year Rags to Riches series episode, and in this episode, we're going to get my face out of the way, so let's do that. All the way out of the way. All right, I'm gone. I'm banished. All right. So on the 50K account, let's just recap this one really quick first, and then we'll get over to the $500 Rags to Riches portfolio itself. So this portfolio is a little bigger, and again, the purpose of this one is to demonstrate the covered call concepts and some examples as the other one continues to grow in the background, since we know the process, and that's the exact same thing I'm going to be doing over there. So as you can see here today, we're dealing with a little bit of red, and that's okay. That's just because the share price kind of pulled back on NEO. OCGN obviously pushed, so we're not too worried about that one. And oh, let me turn extended hours back on as well. Sorry. So OCGN went up, which means the share price went up. The contract value goes up as well, which means it goes down for us because we're the seller. But the share price kind of outperforms that. So not too worried about that. But you can see here on NEO, we kind of pumped pre-market and then it fell right back down, and that's okay because we're just kind of in this little retracement zone so far. So if I draw a retrace here from the low all the way up to here, you can see we're just kind of hanging out above the halfway mark. So I'm not too worried about that. We're finding support just under 6, and if it continues to sell off, that's okay. Because the strategy makes money in all 3 directions, so I don't have to stress. Plus, I got a nice low average down here at 535. Now, my actual cost basis is 535 minus the 55 that I collected for the contract, so my real average is down here at 480, so I really don't care what happens up here. But I would like to see some money a little bit faster and a little bit cleaner, ultimately just so I can get a sign so I can show you guys what that looks like, but I guess we'll just have to hang out and sell a bunch of calls instead. So as you can see here, I still have these 2 positions. They're just kind of going up and down throughout the day. Unfortunately, there's no way to graph that for the intraday stuff. But we can see we've got our 1 month and 3 month. Now this is a portfolio I started on the 1st of March. I think I settled the funds and then I started buying stuff on the 3rd or the 4th or something like that. It was pretty early in. But I also picked up a Walgreens WBA covered call. This is in their response to Panoramic. He asked me how I felt about it. So I was like, you know what? I think I'm just gonna go for it, just to kind of demonstrate again the concept here. So I looked at the stock itself. I like it. It's a decent stock. I'm not a big fan of it, but I like it enough to do a covered call on. It had a nice healthy option chain. So if I look here, I come over here and I click this. The 15-day out contracts are the ones that I went for, so March 28th, and I got a 2150 contract, and I got filled at $92. So it's not bad on a $2,100 investment. So let's just go ahead and do some math here. So I paid $21.26 times 100 times 100 shares. Okay, so my total investment in this position so far, my deficit is $21.26, and then I got paid. So I'm going to subtract $92 from that. So $2,034 is my net investment, and then that will be a net profit of 92 plus the difference between 2126 and 2150. So if we do 0.24 times 100 plus 92, so my net profit potential on this is going to be 116. We're going to divide that into 2126 times 100, so that's about a 5.5% net profit within 15 days. So we'll see if that cooks up or down. Either way, I make money, so I'm not too worried about it. And I can always close it early if I want to, right? Like this one here on NEO, this popped up over the 58.80 profit cap, but I didn't sell it because I want to hold this till I get a sign. But if this one pops up, I'll just sell it real quick. So what I can do is I can just calculate that number, and I can click this, and I can click this, and I can close by a limit order, and then set my price. And that's it. So easy enough, but I don't want to fixate too much on this portfolio because it's a bigger one, and I know not everyone is on a bigger portfolio. So let's go over here and look at this fella. I had to forget my different pins here. Okay, so the OCGN, the short expiration, the one that's for this Friday, this is actually increased in value since the price of OCGN went up. I'm going to collapse this down a little bit here. So OCGN pushed up pretty aggressively. This went from 8 cents. Where is it? This one went from 8 cents, which was a 50% profit for me, up to 13 cents. Now it expires Friday, so I don't expect it to stay up here. Especially if the price pulls down or goes sideways, this contract value is going to fall off pretty rapidly because it's a it's a linear decay until it gets close to expiration, then it curves. So that'll be pretty nice tomorrow into Friday on that one. So this contract will expire worthless in most cases. I don't expect it to get assigned because it's got to go up well over 120 and all that good stuff, and I don't see that happening unless there's a short squeeze. So with that said, this one will probably expire worthless, and you guys will see that it will just disappear from my portfolio, and this will no longer show cover option, and it'll just restore this to 100 shares outside of the OCGN umbrella here. So I'll have this one left and these 100 shares on the side if this expires worthless, okay? And then that's just the same process for all this stuff. So you can see here that for today's unrealized P&L here, or for today's movements, we're down 1.26%, and that's okay. You know, I'm going to financially recover from this. I'm not too worried about it. But you can see that, you know, I made 15 bucks on this. And then again, after Friday, so next Monday, I'll be able to sell another covered call off these same 100 shares. And then that will take, if we do some math here, right, this is kind of the whole process. If I paid $89.94 for 100 shares, and I profited, I already made $15 on those 100 shares. And then if I do another one next week, my average goes from $74.94, my cost basis, right? This is where I actually bought the shares, right here, $89.94. This is my real cost basis, right? That's my break even. So if I sell another $15 premium contract, that'll bring this number down to $59.94, which will be down here somewhere around there. That's close enough. All right. So if I kick this up to the daily chart, you can see, let me just erase that. We kind of already know all this stuff, and I'll get rid of the $1 as well. This is where I bought the shares. This is what they're currently worth as far as cost, right? So this is profit right here already on the shares. And then if I sell another call next Monday, and it's $15, for example, then this brings my cost basis from $89.94 altogether when I started down to $59.85. So that is insane. And then that basically just means I would have bought these shares down here, and then I could sell them up here for the profit. Now, that's not reflected here in the average price on the shares because that's a direct cash payment. It's treated separately. But as long as you keep track of this stuff, you can tell where your average is, and it's a pretty nice thing. Now, I also have a second call on OCGN from 100 shares at 96 cents per share that I made $25 on. So as long as that expires worthless a month from now, those will be worth 71 cents per share as far as the cost basis goes. So it's a pretty effective strategy for not doing anything. Like the other account, I haven't bought anything since like last Monday, except for the other covered call on WBA this morning. Now, one thing I did buy in this portfolio is I bought 9 more shares of Tesla. So if we look at Tesla here, we can see that we kind of fell down, pulled back up, and then we're starting to push down here, and we're also running into a support. Now, I don't really care too much about what the share price does here because I'm just holding this for the dividends until they pay each other off. But I did have some money left over from the beginning of the month that I didn't want to commit too fast because I kind of expected some chaos with Tesla, and I just kind of wanted to grab a good chunk of that. So if I look at the the trade details here, you can see I just grabbed these other 9 shares at 16.17. Obviously, it's pulled down since then, but I got a pretty nice low scoop on that, and I'm okay with that. It was around this area. Sorry, right here. So that's okay, right? That's what I'm after here. I'm just trying to get a good deal, get those dividends rolling in nice and fast. Now, these dividends are based on the share price, so now I have 36 of them, which is a pretty aggressive dividend. So next time the dividend rolls around, that's 36 more payments, which should be effectively twice the price as the last one, as long as the price doesn't go down too fast, too far. Clip, obviously, is just kind of pushing right up. You can see multiple gaps up on the daily, just kind of letting it do its thing. Now, this one, my average here is 16.17, but I've collected dividends since then, so that has lowered my cost basis quite a bit. So I'm just waiting for those shares to kind of pay themselves off. Right now, I'm currently about 7% down unrealized, and that doesn't include the dividend payouts. Ladder has pulled down a little bit. Again, it's still within that 3% range. It was 1%. Now it's 2% down. I'm not worried about this one. It's not a super fast mover. And I'm willing to trade this in a much bigger range. So it's just kind of chilling, doing its thing. Main is up. O is up. Still waiting on SFES. Now, this is the one where they did the going dark transaction, so they're going to buy my shares, and I'll make a specific profit on that. since I had fewer than 100 shares. So Johnson & Johnson pulled back a little bit, but we're seeing a wick, so I'm not too worried about this one. Again, it's just kind of, it's my long-term position. It's my best one, in my opinion. So I'm just kind of hanging out, waiting for it. Best for this portfolio, I should say. And then there's Schwab ETF, which is just pushing up pretty aggressively. It's starting to see a little bit of a wick action, but it's been doing that kind of every peak here, so I'm not too worried about it. And this one is a decent one for doing covered calls against, I believe, as well. So let me just take a peek at the option data here. So if I go out 37 days, you can see there's decent volume on these, but I'm going to hold off because I don't want to buy 100 shares on this small portfolio. We're going to have to wait on that one. And of course, JEPQ, it's just kind of trekking along, doing its thing. And again, you know, this my cost basis here is $49.19, but every time I collect a dividend, it lowers that number behind the scenes. So this is not an accurate number for what my average per share is. So keep that in mind, and that's why we have the spreadsheet and stuff, because you will see a drastic difference over time between the portfolio value, the dollars invested, and the number of shares you have. So that's pretty cool. And that gap is passive income, and it compounds, and we can reinvest it. So days like today, where it's just kind of a little bit red, I'm not too worried about it. It's just a little bit of redness. We're down, 1.4% for the day. It's not the end of the world. It's okay. It's not this day, right? That was this morning. That was on JEPQ as well. So just kind of going with the flow and seeing where it goes. So I just wanted to make sure that I incorporated the new Tesla shares in this episode, as well as the WBA covered call on the other account, because those are two new positions. And again, I'm taking these for the demonstration of walking you guys through how it all works. If you like it, you're more than welcome to trade it on your own, but don't ever just blindly copy me or anyone else. But I'm pretty optimistic about the WBA covered call, because again, I make money in all three directions, up, down, or sideways. So that's the beauty of this whole thing. Oops, I forgot my, there we go, pin code. Let me just switch that back. Okay. So as we can see here, NEO fell down a little bit, finding support in this retracement. Maybe it'll push back up. Maybe it'll go for a gap fill. Who knows? I don't care. I make money either way. OCGN kind of pulling back a little bit. We're kind of validating that recent high. But again, I don't care, right? I'm still making plenty of money, and my average is not here. It's down here somewhere, or down by 92 minus 20, so 72 cents. It's down here somewhere. So, not too worried about it, right? We got plenty of room to fall, and we make money along the way. So with that said, I'm going to end this episode so I don't repeat myself, and I'll catch you guys next time. Thank you all for watching, and if you aren't currently subscribed, make sure you guys subscribe, and if you don't mind, slap a like and a comment on the video. It just helps everybody else get exposure to the videos. I'm not asking for my ego or anything. I just want to make sure that more people can have access to these episodes, because this is the kind of stuff that should be taught in schools, in my opinion, but I'm not a board of directors in the education department. The best I could do is make YouTube videos. All right, I'll see you guys later. Thank you all for watching, and goodbye.